you're watching Stock Watch with me, Zinati Guma, and joining me to take your stock-related questions tonight are Zwelakhe Mnguni from Benguela Global Fund Managers and Jean Pierre Verster from Protea Capital Management. Be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS on 41392 or on X using the hashtag StockWatch. Thank you so much for your time, gents. Let's actually start off with a question that's asking about the declines that we saw today. Did today's Q1 data caused today's market decline? Nearly every sector highlighted the misery of our markets. Jobs data will no doubt mirror this. Was it all the contractions that we saw in Q1 today?
No, not necessarily. I think there's a lot of uncertainty around the election, and there's been back and forth stories around which direction is it going. Is it going DA, ANC, or is it going ANC, FFMK, that kind of angle? And I think it does sound like it's starting to move in the direction of the ANC, EFF. So I think the market are getting a bit jittery about it.
Well, I was actually, because, I mean, you see a lot of, what markets are pricing in terms of risk. When you look at the Rand, and as much as the Rand is not at the levels that we saw about 2 weeks ago, where it looked like it was going to break that 18 Rand level against the US dollar, it actually hasn't broken 19 Rand. So, JP, would you say that things are not that bad, or markets are just more optimistic at this point in terms of what the ANC could do?
Well, an ex-president of ours said in South Africa, it's never the best or the worst that happens. So this seems like a continuance thereof, that hopefully whatever the outcome is, it won't be necessarily the best outcome, but it won't be the worst outcome for markets and for our economy. So I do think that the markets are trying to price in what might be the outcome, how the ANC will be in power, who their partners will be. And the Rand is the best barometer for that. So you can look at the local stock exchange, but remember also, we've got a lot of shares of companies that make most of their earnings offshore. More than half of the JSE's earnings, if you look through the companies where they make their money, is actually not in Rand, it's earned in other currencies. So the stock market is an important barometer, but the Rand is even a better barometer for risk that people perceive in terms of the country.
So actually, just on that, you make a very interesting point that a lot of the companies that are listed on the JSE, they don't make, a lot of them don't make their money, or the majority of their money in South Africa. Just sticking with you, JP. So would you say that as much as the economy matters at some point, but it's not really the determining factor in terms of the direction that the JSE will go in, JP?
Exactly. It's not just the South African economy. The South African economy is a very important driver for our local market, but it's not the only driver. Offshore markets and other factors also come into play, yes.
All right. You spoke about the elections and what markets are maybe thinking about right now, Zwelakhe. And there's actually a question here. Why do the markets favor an ANC and DA coalition? And this is, I mean, a very interesting one, because even yesterday I asked this question. I was talking to Razia Khan from Standard Chartered, and I was asking why the markets have such a divergence in terms of what they would prefer, because the people of South Africa have spoken, to be quite honest. Why is there that tension and that divergence? Zwelakhe?
Yeah, you put me on the spot here. I'm not going to express my true views, so I'll tell you like an investor. Look, I think there's a lot of perception and concerns, and the truth is, it's all up to all of us as South Africans. It's not only the politicians that can make this country move forward. So I certainly think that the perception that whatever outcome would have an extreme impact, it depends on how the rest of us act. If we all take our money and go leave the country, I mean, that would be disastrous. So markets prefer an environment where there could be policy continuity, and I think that is probably one thing that is not yet here at this stage.
All right, and I guess we will hear more on that in these next 2 weeks. Let's get on to some of the questions that actually came through. This one specifically for JP, but of course I will not just be asking JP. JP, you've expressed that at some point that Transaction Capital was a buy. I don't know if you expressed that it was a buy or you had bought it. Would there be a difference? You bought it. I remember when you bought it, but is it a buy?
So generally, those two things for me are the same. If I like something, I buy it in the funds under my management, and if you ask me about it, then I'll tell you that I like it. So yes, I bought Transaction Capital. It was just before the unbundling of WeBuyCars, and in my mind, I liked WeBuyCars, but I also saw that there could be value in what's left in Transaction Capital, which is basically Newton, because in the whole unbundling of WeBuyCars, there was enough capital raised to sort out the debt at Transaction Capital. And that means that what is left is Newton and Mobilize. And Mobilize basically has got a negative value.
Yeah.
But because the debt has been sorted at the holding company level, at the worst, it's worth zero. So you're actually buying Newton. And Newton has been struggling a little bit because of a lack of funding. They couldn't buy books to work on and get the money in. But that is sorted now. So I am optimistic. And the price has come down a little bit since the unbundling from around 3 Rand to 2 Rand 60. So I'm a buyer. I have bought. And I'm still long in the funds under my management. So I think in a year's time, we could see a value unlock here.
All right. Zwelakhe, would you be seeing some opportunity here, or is it just too much effort for you at this point?
No, definitely not my kind of stock that I think especially what is left behind. I think WeBuyCars is a better business if I had to compare the two, but definitely wouldn't be interested in the remainder of the business. There's still a bit of taxi finance pain that is lingering there. So I also think that management didn't do so well in terms of how they treated the markets. So I wouldn't touch that one.
All right. Well, just talking about car companies or companies that were exposed to car companies, Zeda actually came out with its results last week. I remember they also, in some part of their results, they said that they experienced pressure in the second-hand car market, but maybe it might have just been a normalization there. What do you make of Zeda, JP?
I like it. I think it's relatively cheap. As you said, and they also referred to this in their results presentation, they've come from a boom.
Yeah.
There's been a boom in the vehicle hiring and leasing market, more hiring than anything else, car hire. So coming off that boom, profits were slightly lower, but still reasonably high, good margins. And the share is relatively cheap. If I compare Zeda to some other similar companies like Combined Motor Holdings and Motus, my preference is for Combined Motor Holdings. It's also cheap, but I think it's a better business. It doesn't have the leasing, but it has some motor vehicle dealerships that are doing decently. And I prefer the car rental business within Combined Motor Holdings as well. So if I had to choose between the two, I would choose Combined Motor Holdings. But even on its own, I think Zeda is a decent proposition at the current price.
Yeah. Zwelakhe, would you be exposing yourself to car companies at this point?
I think we're getting to a point where I would think that the opportunities are emerging, and the reason being that if we are headed for lower rates in future, I mean that's often a good catalyst for this sector, and you may do quite well. Many of these stocks, as JP says, they're trading at quite low multiples. I mean they do offer value. So I would certainly be looking at some opportunities within the sector.
All right. Well, talking about opportunities, there is a question here on Amplats. Surely Amplats must be a buy at 580. It was trading well over 820 just 10 trading days ago. Are you all buying at this level? And if not, which level will you start buying? 820. JP, Amplats, is it too cheap to pass up?
Not for me. If you want to decide if Amplats is cheap or expensive, You can't just look at the current price relative to where the price has been before. More importantly is to look at the current price and the current price of the PGM basket relative to that price where that has been before. And the PGM basket price has come down sharply. It's more than halved.
Yeah.
So if the commodity that you sell is more than halved in price, your stock should more than halve because of the leverage effect and the fact that that's your revenue and then you have costs, and that magnifies the impact on your bottom line. So until we see an uptick in the PGM basket price, I would not be a buyer of Amplats. And that PGM basket price has gone sideways for the last 6 months or so. So some of the platinum companies has bounced a little bit, almost in anticipation of a rise in the PGM basket price. Amplats have gone the other way because of the potential unbundling out of Anglo American. So people know there's going to be a lot of stock coming to the market. A lot of current Anglo American shareholders are going to get Amplat shares, not because they wanted them, just because they got them in the unbundling and might decide to sell, which could put pressure on the Amplat share price. So I would not be a buyer of Amplats until the PGM basket price improves and potentially getting closer to the date of the unbundling.
It's very interesting because before this before BHP approached Anglo for this deal, a lot of people were actually buying Amplats and hoping for better prospects in that PGM space. But I haven't really heard a lot of people saying that they want to buy Amplats. I think maybe 2 people that have gone against everybody, and just this notion that there's going to be this big selling. Zwelakhe, what do you make of Amplats at this point, and also what it is now, and just the narrative around it due to the strategy that Anglo American is going for, where it will be unbundled?
Look, I think I agree with a lot of things that JP has said. I think I'll probably add that one of the reasons why we've seen the PGM prices going sideways is that Europe is getting flooded, or the rest of the world is getting flooded by Chinese electric vehicles, and that is putting a lot of pressure on the combustion engines. In addition to that, and we are seeing that, I mean, Europe is struggling for energy, and I don't know the impact on production, but it was significant at one stage. So the demand for PGMs is under pressure, so the commodity prices have come under pressure. So the Amplats of this world are reflecting that. But it may be an opportunity for, you don't need a significantly high PGM basket price to actually get to the current price. So I would probably say that as people sell and there's this concern around the Anglo unbundling, it may create an opportunity for people to start buying into it. I'll certainly be looking at it a lot more seriously.
All right, so let's get into more questions. Can the panel give their view on Truworths for a buy? I think the last time we looked at Truworths was last week when all the retailers were actually down, being led by Woolies. Zwelakhe, starting with you, Truworths at this point, is it good value, looking cheap?
I have to ask what the ANC coalition is going to look like first.
Okay.
No, I think it does look decent, but I think you definitely have like some macro risk there. It is a relatively decent quality business. I would probably prefer Truworths over Fortune, for example.
Okay.
Yeah.
Yeah, quite an interesting one. Yeah, I feel like half the market would prefer Truworths, half TFG. JP, Truworths, and maybe just making that comparison as well between Truworths and TFG on your side.
I'm in the same half as Zwelakhe. I also prefer Truworths to TFG. I also prefer Truworths to Mr. Price.
Okay.
Even though Mr. Price currently is trading at a decent price, I think there's more value in the Truworths share. And you have the SA exposure, and that's sort of like chugging along, keeping its own. But then you have the offshore exposure through Office, the footwear retailer in the UK. And they really have fixed that business. So that's really coming right, and that is an extra boost to the investment case. So I actually still like Truworths. I liked it a year ago. It's done very well, better than most other apparel retailers. But I do think there's even some more upside if they continue the recovery, specifically in office.
All right. Gents, let's go back to PGMs. There's a viewer that says, please put up the Sibanye-Stillwater graph and ask the panel if they would enter now given the volatility of the graph. Of course, a PGM miner that is not subject to corporate action, and it was actually leading the losses today. Zwelakhe, what do you make of this volatility with Sibanye-Stillwater, and would you be going in or not?
Not a kind of stock that I would want to own. I mean, I think it's they're trying to build a futuristic portfolio of commodities, but I think they've gone into it too hard, and they didn't factor in the, if you could call it, the margin of safety in that. They've spent all the cash that they had. They've gotten into debt after having a windfall from the PGMs, and they will probably work out in the long term. But I wouldn't want to invest in it now.
JP, yeah, would this be a stock where you could find a value in the volatility, or just stay away from it because of the volatility?
It's not necessarily the volatility that's the issue for me. I mean, volatility means a lot of up and down prices. It is the price relative to the value. And again, I agree with Zwelakhe. I don't see a lot of value in Sibanye, especially because they've got debt now, and it's after the good days where they made a lot of money through the PGM golden years, that windfall, and now they're back into a net debt situation, and things are tough. So if you go into a tough time in a commodity industry with debt on your balance sheet, yeah, that's a very difficult position to be in. That's partly why they needed to do the convertible issue, where they issued more shares. That put a lot of pressure on the share price. And if we don't get an uptick in the PGM price, you know, they're going to run out of capital again in a few years' time. So I would also be on the sidelines on this one.
All right. Well, there's a sector that everybody has liked. The question goes, everyone that says the banking shares are cheap. Nedbank fell today. Would you enter at this price, Zwelakhe?
Yeah. Look, I think the banking sector is attractive, and again, you have to ask which coalition are we getting. You know,
everything circles back to that.
The truth is, I think the banking sector as a whole looks quite attractive. I think they've tried a few innovative things as a sector where they are now funding some of the renewables more aggressively, offsetting some of the energy funding that they were doing. I think that where we are, I'd probably take a risk. I mean, you know, as JP said, you know, maybe the outcome is not as bad as it was, as what one expects.
Well, actually, I was talking to an analyst, I can't remember who it was, but they said that the banks are grouped into 3 categories. So there's Capitec, First Rand, and Standard Bank, and then Nedbank, and then ABSA. Would you agree with that assessment, JP, and also just your take on Nedbank?
Yes, probably fair. You can even have the cutoff at a different point if you look at the price to book ratios that the banks are trading, but I'm happy with that one.
Okay.
In terms of the banks in general, a bank is very sensitive to the economy in which it operates. And that is why, if you think about what would be the most sensitive to these coalition talks, potentially it would be the banks. You can just imagine if we have expropriation without compensation on properties where there's home loans or other loans against it, well, the bank is going to take a hit. So banks won't do well in that scenario. While if you have a more capitalist-friendly type coalition, that could boost the banks, because that would strengthen potentially their property rights and take away expropriation without compensation. So it really is one that, depending on the coalition talks, you can see potentially quite large moves in the banking sector.
All right. Well, let's go on to media. What's the panel's view on Multichoice and the Canal Plus deal? Of course, they released that joint circular today. I'm not sure what it means, because it's talking about dates and timelines from tomorrow until April 2025. What does this actually mean? Let me start off with you, JP.
So the fact that it opens tomorrow doesn't really mean much, because no one needs to give an answer tomorrow. You can wait. You can give your answer in March 2025. But the point is that it'll be a full year just about before anyone who wants to accept the offer will get 125 Rand. No one is going to get 125 Rand before then. So that's one of the reasons why the share price fell. People realized the chance of a counter offer of someone else coming along is very, very low. And also, there's still a lot of contingencies. I mean, there's a lot of approvals that need to be sought, not just in South Africa, but in other African countries. So it's still a conditional deal. And how you can have a conditional deal open for a whole year, it needs to be a whole year because you need time to find these conditions and hopefully fulfill these conditions. But my goodness, it's sort of, it actually feels like a nothing burger, this circular. It doesn't say anything new. It just says, okay, 125, give us a year, we'll try to make it unconditional. In the meantime, we all need to wait. So that's basically what it said.
Well, yeah, low chance of a counter offer. Zwelakhe, does it look like this deal will go through?
It's a difficult space, as JP says. I mean, you've got all these regulations around who can own the media. And suddenly the regulators are looking very closely at who's actually buying. So I think it's a very complicated deal. I don't think it might even go through at the end of the day, or you might have a partial go through. So yeah, I wouldn't be looking at this stock.
All right. Well, a stock that a lot of people have been asking, just before we go to your stock picks, is Orion Minerals. Would like to ask the gents' opinion on Orion Minerals. My research has told me they expect 22,000 tons of copper sales in 2026 and 55,000 tons by 2030. If everything goes to plan with the company, given the pending BFS release, as well as copper having a really bullish outlook over the next 5 years, do the gents think this would be a good buy? Orion Minerals, JP?
Some big ifs in that question. So it's a bit too early stage for me. There are too many ifs there. So I will rather wait to see what happens. It's too much uncertainty on such an early stage copper company.
It's giving Renogen. Zwelakhe, with all the ifs, what would I know you like copper, but would you specifically be going for Orion Minerals or not?
No, I mean, this is you taking a lot of execution risk on board upfront, so I wouldn't.
Yeah, all right. I
like copper, yes.
Yeah. All right. Well, Jen, something else that you like, your stock pick for today, JP, what are you picking?
So I'm choosing a sporting goods company, and it's the third biggest sporting goods company in the world. Number 1 is Nike, number 2 is Adidas, number 3 is Anta Sports. And people might have heard of Nike or Adidas, but I'm guessing a lot of South Africans haven't heard of Anta Sports. And that's because it's a Chinese sports apparel retailer, sneakers and clothing and all of that. They also own a company called Amer Sports, which listed in New York earlier this year. And that owns brands like Wilson. So if you think of some basketballs with the logo Wilson on. And basically, they're exposed to the Chinese consumer and a few Western consumer markets as well. And we've seen the Chinese economy be under pressure, Chinese consumers be under pressure. And I'm hoping that that's sort of coming to an end and that we could see the bottom of this negative consumer cycle in China. And if that is the case, South Africans are used to buying IT companies exposed to China. What about an apparel company? A bit more simple. We don't have the same regulatory risk. And there's a lot of active athleisure wearers in China that will buy their sneakers and their tights and their t-shirts from Anta Sports. So that's my stock pick tonight. Yeah,
especially work from home people. Zwelakhe, on your side, what are you picking?
Yeah, I'll go with a staple, Reckitt Benckiser. The company is trading at a significant discount to the historic multiples, but more importantly, it's trading at a discount relative to peers. But it has done relatively well. I mean, I think, save for the nutrition division, so they've got a brand called Enfamil, which is the baby foods. that division struggled with volumes there, but in the other divisions where you have healthcare, they've got Nurofen, Gaviscon, those type of products. And then in the other segment, they've got the Detols. That's actually quite a resilient business. And we've seen that as inflation comes down, the volumes have picked up to some extent in the other two divisions. The nutrition division is still struggling, but I think overall, I mean, it's quite a good business trading at a big discount.
All right. Well, thank you so much for your time and for your analysis today, gents. Really great insights there. That is all for tonight's Stock Watch. Thanks to our guests, Zwelakhe Mnguni from Benguela Global Fund Managers and Jean Pierre Verster from Protea Capital Management.